Hello everyone, and welcome to another technical analysis webinar with Trevor Neil. Thank you all for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel, and I'll pass those on to Trevor. We remind you that this webinar will be posted to our YouTube channel in a few hours or so time. So if you'd like to watch the whole thing again, you can do so there. Maybe you just like to watch a small piece again, and you can do so there. And we'd also love it if you subscribe to our channel and click on the bell to get notified whilst you are in YouTube. The webinar handouts for today can be downloaded from the handouts tab of the control panel on GoToWebinar. If you're having any problems locating or downloading them, please just let me know and I'll send you a link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide which details all the different products we offer at FX Choice. If you're watching this on YouTube, these handouts will be available in the description box. Please just click show more and you'll be able to see them. For those of you who don't know Trevor, he has over 40 years experience as a technical analyst and trader and was the global head of technical analysis at Bloomberg. So Trevor, I'm not sure if you've managed to fix that problem, but I'll pass over.
We're in manual mode, I'm afraid.
We're in manual mode, oh dear. What's that? That's EURUSD weekly. What am I seeing there?
Yes, EURUSD weekly.
Okie dokie. Well, I'll pass over to you then, Trevor, and you can take it from there.
Okay. Yeah, sorry about that. Let me, before I start, thanks Dan for the introduction there, and let me just remind people that I really like having questions, and so you know, please anything that you want me to cover apart from the ones who you know I'm going to cover, please let me you know, please ask questions, ask Dan questions. So look, you know, a very strange thing has just happened, but I can fix it fast. Okay, not cryptos, but we want the dollar. And there we are. So what I want to show you is that the picture is sort of pretty well unchanged here. We've got the commodity currencies, the Australian dollar, New Zealand dollar, Canadian dollar, all furthest to the left. So that means left of the dollar, that means weaker than the dollar and underperforming the dollar. So they've gone back to their normal place. The Japanese yen, the only one in this leading quadrant here, which is outperforming right of the vertical line here and above the 100, meaning with positive momentum. But that's even that is very slight. So you know, you've really got high correlation between the Japanese yen and the dollar. So your choice is not a big one between the two, but definitely on the other side, to pair off, we can very clearly see the message here where the weakness lies versus the dollar. And don't forget the dollar itself was weak this week. The direction of the Swiss franc and the Norwegian crown are both good. They're both heading northeasterly. So north, that means with increasing momentum, easterly, stronger versus the dollar. They're not actually stronger than the dollar yet, so that offers opportunity in that to catch the swing as they move into this area. And I think the Swiss franc looks ready, set to do that, and may take over as the yen as an alternative to the dollar. So let's go back now to my chart and look at the euro. So don't forget where the euro was underperforming the dollar. But we had, this is a weekly chart here, and I really show it because we talked a lot about this neckline in the head and shoulders. Left shoulder, head, right shoulder. It depends how you draw the neckline. I had drawn it this way here. This candle here, so the week before last, was a breakdown, but then now we've come back to it. So it's one of two things. It was a false break, or it's a very typical revisit to the neckline. And that happens a lot in head and shoulders patterns. So in itself, it doesn't mean that it was a false move. It's a very typical pattern. The MACD on the weekly is negative, and the RSI is rather weak. So here is that return move up here. So if this is a return move, it should stall right here. It shouldn't go any further than this. If it goes up into the 1880 area in here, then it's settling back on the other side of that neckline, which I've drawn, and we'll have to say, well, it was a false break. But if it stalls here and continues, you know, look at this pattern of lower highs in here and just does another lower high in here, it actually confirms that neckline was broken. This is very, very important, because if this is breaking down, that so this is the US dollar going up, then it's a pretty profound thing. And the count on the minimum price objective up from the head to the neckline here takes us down to 111, right down here. Seems unbelievable that could happen, but you know, I believe in the charts. So just be aware that it can be a false break, and I could have drawn the line badly. That is true, or it could be a break with a retest, and we should then turn weak this week. If that's WEAK, this WEEK this week. So it would be right here, in fact, if it was to be the break that it might be, with all the implications that come with that. On the pound too, we've got the sort of falseness of it. So let's look at the weekly here again. The pound. So I've drawn this line in here, we broke it. Now this one looks much more like it was a false break here. So these lows, spike low here, which I had ignored, break, and then resting back above here. MACD is still negative, the RSI is still weak. So I'm not abandoning hope of that, but I think that it's much more punished, my view, that the pound will go down and the dollar go up. So here it is, we're pushing in here, we've got the lower highs pattern intact. Here are the two lows, potentially a double bottom, but you know, I hate to use the word potential double bottom, because it's not a double bottom till you break the high in between. That's right up here at nearly 140, 139.70 is the level here to confirm that. So I'm waiting and seeing on that. Definitely a bit bruised by that idea that we would this was a major top in the pound. Let's look at now the Australian dollar. So I'm going to have to do this manually. Okay, so sorry, my phone is going. So here's the Australian dollar the dollar going down here. Now here, I do think we've got a pattern of so here we had the high, higher high, lower high. From there to there, we actually met the objective of that, and it came back down to dollar support here and bounced quite strongly. But this pattern, the downward pattern, is still intact here, and we may be ready to tackle that dollar support again. So high, lower high, lower high, lower high, lower high. This would need to turn over this week, turn down this week, if this is going to continue that pattern and break this low here and further test the big long-term support. So in the shorter term, it is currently still bullish, but the resistance, I think you can see here, is very substantial, just where we've got to now. And so I'm watching this closely for a continuation of the downtrend in the dollar there. And I want to show you, we've been following this, the Australian dollar, Japanese yen. And I want to do that on the weekly as well. So here we are here. So this is the Australian dollar. Don't forget, furthest on the left on our RG chart, furthest on the right of our RRG chart, even slightly outperforming the US dollar, is the Japanese yen. So this has been the move that we've been following here. There it is on the weekly chart. We had a bounce this week, and this could be just a counter trend bounce, and therefore some might consider.
Can I just interrupt you, Trevor? Can I
Yes.
just interrupt you for a second? Are you talking about the USD Japanese yen or the Australian dollar Japanese yen?
Australian dollar Japanese yen.
Sorry, I thought you were saying US dollar there. Sorry, please continue.
If I did, I apologize.
Maybe it was just me.
Thanks for picking me up. So Australian dollar, Japanese yen, Australian dollar furthest on the left on our RRG chart, Japanese yen furthest on the right. So we had paired those off. We've been looking at that for quite a long period of time. And we've been following it, those commodity currencies, the weakness, that's the best pair combination that you can have. Furthest to the left, matched against furthest to the right. So, but we've now bounced on it, and this is a counter trend move, and we've got lower highs in here, and again this is one around here, around 80 here now, that if it's going to continue the trend, it should run out of steam right now, this week, right now. So we're watching it very closely. Big resistance in here from 80.50 to 81.50. This looks like a familiar sort of shape, doesn't it? And so if we're going to get another lower high, it should be really right here. So watch this for those of you that want to be short of the weakest and long of the longest, of the strongest. This is the opportunity to monitor. So let's now move on to the cryptos. All of the cryptos, to save you time with me faffing about, are slightly on the right of the dollar, so slightly outperforming the dollar, and also heading north, which means that they're gaining a bit of momentum. So the message is, versus the dollar, the cryptos are looking better, but are the charts actually looking better? So let's type it in here now, BTC. And on the weekly chart, Bitcoin, be better if I typed it on top of the other one. Okay, so this is what I wanted to draw your attention to here. We bounced strongly in, this is Bitcoin. The MACD made its crossover, and the RSI soared on the weekly chart. But we've come to the resistance, which we had identified just below 51,000. And, there was a much hurrah when it broke 50,000, but that was very brief. And there is the strong resistance. So we've made the moves which we thought would be quick, and we've made it quickly, but the next bit of it is going to be quite difficult for Bitcoin. This is a substantial area of resistance here, and I think it's going to find it hard to push through that. So here's the behavior here. It's on the daily chart. It's losing momentum. The RSI is putting in a bearish divergence. You see here, high, higher high, and we've got here we've got a high and a lower high. The RSI is losing momentum here, and also the MACD has turned down negative. So it's losing power as it meets resistance. But a better picture is Ethereum. Let's get these two charts done. So this is the weekly chart in Ethereum. Now this, unlike Bitcoin, which has got a massive area of resistance here, lasting, I think it was 6 weeks, we went up and we went down. So this means it was very brief, very fast indeed here. So I think this is going to find it harder to make more find it easier, to make progress on the upside. The MACD is looking okay, still at a high reading. The MACD is positive. The RSI is okay at a high reading. The MACD is positive on the weekly chart. On the daily chart, we have got loss of momentum. We have got a bearish divergence like we have got on Bitcoin there. So we've definitely got a slowing up going on. The MACD is negative, and this. But I think, unlike Bitcoin, which has got such a big ceiling sitting on top of it, this one, it's much clearer and easier for it to go further up. So the two, that's the better picture. Let's quickly look at Litecoin. Now, Litecoin, you remember, fell the hardest, here from this move to here, it broke, collapsed through 61.8 and really lost so much of the progress it made in 2020. Found its low and is pushed up, and it too has hit a bit of resistance here, surprisingly, really weakening relatively easily at resistance. We've got the bearish divergence here as it's losing momentum. The MACD is negative, and you can see it's flattened out here, and the ADX is declining as the power of the trend is declining. So it's a bit disappointing, this one here, and my favorite is it moves back to Ethereum again, with most potential on the upside, and a clearer, less cloudy sky above it.
Trevor, can I interrupt
yes.
you for a second? We have had a couple of questions.
Good.
I'll ask the first one from Fayez F. Thank you very much for your question. It's a bit of a fundamental question. He says, regarding the macroeconomic view, can we say we are in a stagflation mode, or where are we headed to, reflation or deflation? Well, I said I'd pass the question.
I'm the wrong person to ask about that.
I said I'd pass it on to you, but as a technical analyst, I'm not sure you would want to tackle it.
Yeah, I never let the fundamentals get in the way of my rather clear technical view, and I have found over time my ability to analyze the fundamentals has been really poor. I tend to reiterate what I read in the FT and in research reports, which are consistently wrong about things. But since you asked, I think that the inflation cloud that we had has weakened. That threat, we can see that in the bond market. That's obvious there, that we've got pressure, but we've got something strange going on there, where we've got the rising bond market and also a rising stock market. So this, is a very strange set of affairs. But whether it's inflation or stagflation, it would therefore switch more towards, I don't think it is stagflation. No, I think we've just got milder inflation. That's actually quite a good thing. And so that's the continued condition in it. I can't see any signs. I'm not sure which market you're talking about, but the US stock market, it's not stagnating at all.
Mm-hmm. And ready for the second question?
Yes, sure. Hopefully not.
It's a comment and then a question. So he says, this is a question from Mohammed. Thank you very much for your question. He says, I believe the recent underlying strength of the USD in Forex is supported by the last move of the US dollar Japanese yen, challenging the long-term multi-year downtrend line, which seems like it is almost broken. Don't know if that's true, but a close above 111 would definitely bring the euro down. And then he says, can I have a technical analysis of the USD Japanese yen, please? Thanks.
Yes, with pleasure. So USD did he say
Japanese,
USD or euro?
Sorry, USD Japanese yen, yes, because we looked at Aussie Japanese yen, didn't we?
Yeah. Okay, and so then get them both the pictures again.
Mm-hmm.
Okay, so let's stick with the weekly chart here. So this is the dollar, of course, and it came up to resistance from 2020, these two highs in here. Let's just get that in context here. We've got resistance here at 112, pretty nearly 112, 112, 112, 112, lots of highs around 112 that we nearly got to once again here. Then we got a lot more resistance, 1, 2, 3, 4, 5 tops at 114. So we've got a lot of tops in place here, but we are moving up towards it. We've got higher highs and higher lows pattern in it. And we've backed off a little bit recently. So here's the backing off a little bit recently. And in the daily chart, I think we're in a downtrend in that. We've got lower highs pattern here and lower lows pattern. So it is still backing off from that and has not really found, a base yet. So this is the dollar we're talking about here, backing off, consolidating range. It's got those resistances, layers of very important and powerful resistances in the market. And looking, the support, they're much weaker. I know we aren't got nice shadows below here in the weekly chart. A lot of rejection going on here at 109.50. Sorry, 109.50 there, and it's really building up a picture of consolidating around 110, that big round number. With the RSI at 50 in the middle at 110, the big round number. So the thing is, we've got lots of resistance above. We've got different type of support with the rejection messages from the candles. 110 seems to be like a magnet for it, and it's building up a big trading activity around that number, and it does look as though it wants to stick there. So I think in the short term, by that I mean the next days and a couple of weeks, I think that we'll do more consolidation around the current level of 110.
Okay.
Dan, what did the person who asked me that say that he thought about the yen, or he had been told about the yen?
I believe the recent underlying strength of the USD and Forex is supported by the last move of the US dollar Japanese yen, challenging the long-term multi-trend, which seems like it's also broken. I don't know if it's true, but a close above 111 would definitely bring the euro.
Yeah, so that's what he's talking about is these levels in here, and also the older ones off to the left, and basically that if you like, the tail is wagging the dog a little bit here, that the dollar itself can't make a move because of the yen. Maybe something in that, but this very high correlation between the dollar and the yen being at such important dollar yen resistance level. There's maybe an element of that to be true, but I rather think if the dollar wants to go up or down, it goes up, and the yen follows more that way around.
Mm-hmm. We had another question actually, Trevor, whilst you were talking. It's a short-term question. It's a short-term question about US dollar Swiss franc. Today, this pair is rallying while Euro USD is steadying around 1.180. Same for Dixie. Any comment on this one? Well, we don't offer Dixie for trading. Yeah.
So now I think I would like to go back to the RRG actually to point something out to you about what's going on in the Swiss franc. Let's do that, and just bear with me while I do this. So here now, do you remember when we looked at the Swiss the relative rotation graph? Here is the dollar in the middle here. We've got the Swiss franc above it. That means with positive momentum. That's the Swiss franc itself, but still underperforming the dollar just about. I kind of think I know where that will be next week. These are daily samples here. This is Friday, Thursday, Wednesday, going back through the week here. I think it's headed over here, Norwegian crown too. And so I think we're going to, the franc may become your alternative to the Japanese yen, which is your alternative to the dollar versus the commodity currencies over here. So let's have a look at the chart now. So here's the Swiss franc. Let's do the weekly first. Well, we've got a triangle in here. And this has got a big long downtrend on this side here. And then we've got another line in there I would draw in there as well. Didn't mean to make that so long, but forgive me for that. But what we're doing is we're narrowing up and around the 9120, number 9140 area there. So bulls are pushing up, bears are pushing down. It's got to break, it's got to make a move soon. So which way is it likely to be? This is a weekly chart. So looking at the daily now, let's go into some detail in it. So we've got this consolidation here. So the in order to forecast a breakout in the direction of breakout, we can usually get some help from the other technicals. Bollinger Bands are narrowing at this point, so that's not helping us. If they were beginning to expand, you would be able to say that the market is bending its knees before it jumps. Well, that's not happening now. The ADX is at 11 and falling. That's describing sideways trading. Buy weakness, sell strength will work best. The RSI is at 48, so almost exactly 50, right in the middle, neither bullish nor bearish, not saying anything at all. The same sort of triangular shape, you could draw it also in the RSI itself. And the MACD is almost exactly at 0. A double smooth moving average has got itself to 0. And that means what causes that is sideways trading. So the message is here is, unfortunately, there isn't any help being given currently to which direction, or if it's going to be soon the breakout. It does indicate that this sideways move here will continue for a bit. But I think due to what I see in the RRG chart, I'm biased towards the Swiss franc strengthening, which will be a fall on this chart here ultimately. So, I've got to follow what the relative performance is showing me, which is very much the improving picture there. So I think watching these support levels, this here, very important that if 90.98 were to break, and then confirmed if we break 90.16, that we'd be challenging the 89.31 low there. So it's that's what I'm watching, but I haven't got the warning signs. This activity of sideways messages is usually we get some sort of message of watch out particularly from the Bollinger Bands just before a breakout occurs. Okay, all right then.
Please feel free to move on.
I'll move on. So commodities now, and precious metals firstly. So gold firstly. So gold weekly, again, we've got a range-bound market here. We've got these two incredible spikes or series of spikes down to 1680 at this big support point here. So that really underlines it. And look at the Takuri dipping your toe into the cold stream rejection there by it. It did not want to be there and jumped up from there. Now we've got this series of highs at 1830 in there to be tested. So there they are there at 1830 to watch out for. A break of that will relieve quite a lot of energy right up to 1900. I mean, that's $70 of that we fell so sharply in here. It was so fast to move that if we break, it will probably advance quite sharp, fast there. Got a good pattern in the RSI rising. MACD is also rising. So we're approaching a very, very important potential breakout point to the upside. But let's look at silver. Okay, so now silver came back to 38.2 exactly, and bounce, 1, 2, 3, 4 times at $23. That is a very powerful support point. And then it's seemingly holding, like this white candle here, come up through 35 from below in the RSI. This is the weekly chart, of course. The MACD, which is always going to lag, is still negative here. So how's it looking on the daily chart? Well, I think that we just cleared these short-term support here. You know, these highs here were below 24. We're trading at 24 right now, and that would give us an intermediate low here. The MACD pattern is good. The RSI pattern is good. The MACD pattern is good. So I think we're breaking up here, and that gives us a good run at 25 here. Very fast move down here, and so it could be a fast move up. Gold hasn't made the break. I think silver is making the break. Okay, gold may follow, but silver is leading at the moment. Let's go to Brent crude oil now. This whole complex is on fire. So looking at, you know, beyond crude oil itself, but into the products and distillates and things like that, and even carbon, the carbon certificates making a new all-time high. Coal, we hate coal, but it's making an all-time high. You know, there isn't just enough stuff to power our needs in here in Europe. I'm sitting here in Europe. You know, we've got, I look out my window here, we've got very little wind, we've got very little sunshine, and it's a grey sky here, and that's the case all over Europe. It's been a terrible summer, and so all the switch to solar and to wind power is, you know, we don't get high wind in the winter anyway, but in the summer anyway. But it's really, we're short of power, and what we have got is coal-powered power stations which are taking up the slack, and so coal is powering ahead. But the whole energy situation is extremely tight. We're making new all-time highs all over the place in natural gas, and in Holland, which is the lead one, German power, US natural gas. They're all making that burst into new highs, and same in Asia. So let's go to the Brent here. So the Brent is suffering. You know, funnily enough, the lead. You know, it all comes from oil. You break oil to make heating oil and so forth. You crack it. It's the one that's weakest actually. It had a nice move up, but it's met resistance, and so far that is stifling it. This is very, very important resistance. This could release a big, a powerful move up if we can just break it. So we're looking back at the 2019 highs has been cleared. The 2018 highs are ahead of us here. So whereas the products are at the products of crude oil are at new highs, the base product that it all comes from is not yet at a new high, but there's great potential in this one here. It's pushing forward again towards tackling that high. So here it is moving up here. Watch out for 76.40 high. This one here, all these levels breaking 77.85 should release waves of energy as it does. The support is very strong here, and the pullback was 38.2, which is, you know, is bullish. The RSI looking good, the MACD looking good. I hope to see this week a further push into the resistance level. This is a case of the tail wagging the dog. You know, the tail is definitely making new highs. The dog, which is the Brent crude itself, is slow, but I think it can't. You know, you need more crude oil if you're going to make products from the crude oil. Yeah. So let's move on now to the stock indices, if that's okay.
Yeah, that's fine. We do actually have a question about stock indices, but I'm pretty sure you're going to answer it. It just wants to take a look at the NASDAQ. And the question is, any signs of weakness in the uptrend? But I'm sure you'll take a look at the NASDAQ anyway.
Yeah. So we're all looking for signs of weakness, but it doesn't come, does it? It's amazing. So let's S&P index, US 500, also known as, and here the US 500. So, I mean, look at that, up and up and up and up. And this is the last week here. It was strong again. We had this, I'll take it away now because it just didn't happen. We are seasonally weak. Structurally, the market is weak. The breadth is not there. Even the private speculators and the Robinhood traders and the people who buy ETFs are reining back a bit. So there's every sign there that it's it could stop, but it isn't stopping. That's what you can't argue with. That is making a new high, and it's powerful. The MACD is strong, and the RSI is strong also. Here's the daily chart now of it. So here we've got that lovely week that we had last week, recovering from two-day fall. All the technicals improved. So if you just look at the charts, it's bullish. It's as strong as you like, short, intermediate, long-term, bullish. But everything else about it says that it's at an extreme, it's never been this level before, and it's weak, and when it's has this sort of structure of breadth that normally will come down. But I've just done an interview, on a TV interview, and one of the questions the guy asked me was, what lesson have I learned in my long career in technical analysis, or one lesson I've learned? There are so many lessons I've learned, but one lesson I have learned is just because something's never happened before, that just means it's waiting to happen in a way. Too many people in the markets and technical analysis say it can't go any higher because it's never been this high before, or every time the breadth goes to this reading, the market goes down until it doesn't. This is an extraordinary bull market. It's a once in a lifetime event. You young people, enjoy it. You'll only have one in your whole life, and this is my one here. And it's all I've seen is records broken. Things that have never happened before, and people say it can't happen because it's never happened before. Well, it just hasn't happened yet, and that is a big lesson to learn. Don't ever think that something can't happen because it's never happened before. That's not a reason for it not happen, but it's often given as the reason why it won't happen. So as you can see, strong message there. Let's look at the Tech 100. Oh, came up wrong there. And we must just have the joy of the weekly. Okay, look at that. It sort of looked as though it was slowing up a little bit there, and then burst higher. It just burst higher. MACD has remained positive since June. This is the weekly chart, and the RSI is looking extremely strong. So here it is here, up, little pause just before, and now moving ahead strongly once again. It's a fast moving train, this thing. The Bollinger Bands are expanding, so it indicates the strength is increasing. The ADX is 13, which is a surprisingly low reading for a market that's moving up as strongly as that. The RSI is extremely strong. The MACD is very positive here too. So we've got to say, we really have to be honest and believe what we see here. It's a breakout, it's a break to new all-time highs. The MACD is bullish. It's well supported now, because we spent a bit of time really here, just above 15,000, 15,100. So, it's a bullish chart. It really is still bullish. Can't say the same about the UK 100 though. So here we have the UK 100, and just do it on the weekly. So here it is, and this is, many of you that listen regularly know why. It's because we've got a big cigar here. This is the biggest and best cigar in the world. It's called a Trinidad. It's from Cuba, but it's not from Trinidad. It's from Cuba, and this is a Trinidad cigar here. This is a big 4-year consolidation in a relatively narrow range, and we have moved up from very low rate reading down here from 5,000 to 7,000, and it's hit its head on this. It would be very difficult for the UK 100 to make further progress, and it's losing momentum. Here you can see on the weekly chart and the MACD, it's already happened. It's hit its head, and so this is it. I expect this to at best go sideways there. So this is a very unattractive chart, having looked at the very attractive charts in the US. And then looking in Germany, sorry, there we are. Too many letters in the code there. So DE30. Here's the weekly of it, and very strong chart, absolutely rampant chart moving. Can extend this line there and put that up there. That's what it was meant to be there. So here it is, the weekly chart moving ahead, not as strong as the US 2 indices that we watch, the Tech 100 and the US 500, but it is still moving up much better than the UK 100. And look at this, you see this is not inhibited in any way by a big wall of resistance. This has got blue sky ahead of it. So outside the US, this is the best looking chart. On the daily, so it's a small amount of hesitation at the moment here, but I think that's actually presenting an opportunity. If you're a buy the dip kind of guy or girl, then this is probably one of those occasions for it. It's being pulled up by the US indices, and if you were anywhere, you should be in the US. It's powering ahead, and we had that. If I can use the F word for a moment, fundamentals. That we had the Jackson Hole. Market was holding its breath. Basically, the message is quite accommodating, quite dovish from it, tapering, but I'm very conscious of the damage I can do, and I'll do it very carefully. Well, that was exactly what the US market wanted to hear, and so that basically that was a green light for further advances.
Okay.
Okay. Well, we've overrun a lot there.
Yeah, we're 15 minutes over today, Trevor, but don't worry about it. It's all good. It's all good content.
Yeah, it was good content. Maybe I added 15 minutes by having to do all those changes manually.
No worries.
But,
well, we can
Thanks
sign off. Okay, well, yeah, thank you very much for attending, everyone. Please join us again next week, same time, same place. And don't forget that we're posting this webinar to our YouTube channel in a few hours or so time. So if you came later and you want to watch in the beginning, or you just like to watch the whole thing again, or you can just check out a particular section of the webinar there. And if you do go over to YouTube, please don't forget to subscribe to our channel and click on the bell to get notified. Trevor, do you have anything else to add? Closing comments?
No, I think thank you very much indeed, everybody, for attending. I really appreciate it. I particularly appreciate those who did ask questions. They're all great questions, and I'm glad to answer them as best I can. So thanks very much for that. I hope you have a great week, and may the trend be with you. Thanks.
Cheers, Trevor.
Bye, everyone.
Thanks, everyone.
Thank
Bye-bye.
you, Dan.
Bye-bye. Bye-bye. Bye-bye.